What's up, everyone? Have you ever been curious how to use a self-directed IRA to buy co-living properties? So whether this is your own self-directed or you want to raise capital, you 100% need to know how to do this. Essentially, it's a shortcut. Rachel, I know you've you've done it how many years now? You've kind of used your own,
I
or
use
how would
my
you
own.
explain like it? Mhm.
Yeah, I actually just started it about a year ago. I didn't even know it was a thing until I saw some podcast. I think it was Pace Morby and Matt Sorensen talking about self-directed IRAs. And yeah, that was like mind blowing to me because I didn't know. So I had a Roth IRA from before, so I converted it. And I've actually used it in two fix and flip properties. But you can use it in co-living. I just haven't done that yet. Um, yeah, so you can use it for a lot of things. Actually, it doesn't even have to be real estate, but you can buy it for art. You can buy it for all kinds of investments. So when I grew up, I always only learned that you invest in the stock market. And, there's
Yeah.
real estate was over here, but I didn't think I would ever have enough money to do that. So this kind of opened the door into investing in real estate in a way that I didn't even know was possible. So I thought that was pretty cool.
Love it. All right, so before we deep dive into it, I wanted to give a little background to anyone that watches this about who is Rachel Johns. So Rachel Johns is a rare breed. She does everything. She is a doctor, a real estate, a co-living real estate investor, self-storage real estate investor, evidently a fix and flipper. Um, yeah, Rachel, you
Investor. I don't
are
do it myself.
okay. Yeah, yeah, smart. So Rachel, you are unique, and I'm excited to learn about not just self-directed, but everything you're up to, self-storage, stuff like that. Um, when kind of backtracking, when did you actually start not just self-directed, but real estate? Like when was the first deal, or when did you like seriously start spending regular time saying, "All right, I'm going to do this"?
So we had a rental property maybe about 15 years ago. That was our first rental. So it was our house. We had a small house and we were, growing our family. So we bought something bigger and we decided to keep the old house as a rental. And we did everything the wrong way. But it was a good learning opportunity. And we got a renter in for about 18 months. And then actually, after she was done, we sold it because I did not have time to manage it. I was managing it myself. And she was fine. It's not like she was high maintenance or anything like that. But after they were gone, we had to like replace the carpets and do some stuff. And I just, I had a full-time job and I had little kids. So I didn't feel that that was something that I could manage on the side. So we just sold it, which was probably the worst thing we could have done, right? Because you want to keep these assets and they grow over time. And so now I know better. And so we really just got back into it about a year ago. Um, we joined Pace Morby's Sub 2 community and I joined Gator also. And I did my self-directed IRA. We started building relationships. I invested in some fix and flip properties. I started learning about co-living, which I really love because I have two stepsons that are in their 20s. One of them is basically in a co-living property. He's, in this little frat house with a couple other, guys. And my other stepson lives in Denver, but he wants to move back to California where we are, and they can't afford it. And so I love these co-living properties that allow these young professionals, who do make money, but they just can't afford anything because just the world's getting harder. So I like being able to create that space for people like my stepsons and my kids. And then we kind of just fell into this self-storage. Um, my husband has this wholesaler friend who just sends him all kinds of stuff. No rhyme or reason to it. And he sent him this self-storage facility. And then we didn't actually buy that one that he sent, but it got us talking to this other guy and we bought his property because it was a seller finance. And now we're actually in a deal to buy a second property in that same town. So we're like expanding our footprint in that little town, which is in Arkansas. So we manage it remotely. We live in California. Um, so yeah, that's kind of what we're doing. We're trying to concentrate on, doing more self-storage. So I'm building some relationships and um, with other people who want to operate, people who want to invest. So that's kind of our concentration at the moment.
Love it. I'm curious. So I know we were just in Hawaii together a week ago.
That was
Um,
so much fun.
it was, it's us and then a handful of other investors that were all partnered on deals with together, mastermind investors. What would you say? I know that you guys created a group. Do you think you'll split? How will you split your focus? It'll be a certain percent towards self-storage, certain percent towards co-living, another percent towards something I don't even know about yet. Like, what? How do you? I mean, I
It's
know you
hard.
you have a full-time
Yeah.
job, so like, how do you
I I
weave it
have a
in?
full-time job, and actually I do have I do something else. I do way too many things. I started a Facebook group for other healthcare professionals, and I teach them about investing in alternative assets. So one of the drawbacks to our job, and I'm sure it's not just our industry either, but we spend so much time learning medicine and working in medicine that we really don't have a lot of time to deal with our finances. And so a lot of people have this like set it and forget it mode, right? Like buy a stock index and just let it ride, right?
Hmm.
But that doesn't help us with our taxes. Like that is really the bane of our existence, right? And that's for everybody too. But we get like very few write-offs. We're not small business owners where we have all these write-offs. We have really no write-offs. And so that's where investing in alternative assets come in because you get depreciation. And so you can use that to write off some of your income. So I also do that on the side. Um, so yeah, we
Airbnbs
started
or
this. Go ahead.
through Airbnbs or how's your? I know there's a few different ways, but Airbnb is definitely a common one.
Airbnb is definitely a common one because there's a tax write-off for that. That's not, I mean, and if you have time for that, it's great. I don't have time for it, so that's not what I'm going to do. I'm
Yeah.
looking more for like passive investing opportunities where I get a cut of the depreciation. So, like when I'm investing with you guys with co-living, I am not managing the property. Like I give you my money and you guys do what you do. And then I get a cut of the gains and I get a cut of the depreciation. So those are the kinds of things that I teach people how to get into. But we did start a little group out of the Hawaii Mastermind. We're the powerhouse ladies, and
Yeah.
so we're going to be, looking at buying some co-living properties and expanding that in the world.
Yeah.
It'll be fun.
I'm ex- I'm excited to see how that grows because I don't know the date yet, but at some point there's going to be a co-living 301, and it would be
Oh,
really
great.
cool to document what you guys do and kind of the time, like how it just unfolds and how the momentum kicks in. So just throwing it out there in like 8 months. If I'm like, Rachel, do you want to be a special guest?
Okay.
So planting that seed right now. Um, all right. So yeah, you're essentially on a mission to help educate a lot of people in the medical world how to bring down that taxable income as well,
Yeah.
is what it sounds like. Okay.
Yeah.
So I guess leading into the self-directed, how does it work? I know there's like IRA, Roth IRA, 401ks, everything, at least in your, where you work at. What is the most common way for people, doctors, to lend? Is it from just a regular IRA? Is there a certain type of 401k that they could do something unique with as well? Or what would you say is the 101 version?
Yeah, most doctors, I think, would just lend from their personal funds. Um, Not many of us have an IRA because we make too much money to invest in that, according to the
Mhm.
IRS rules. You can invest, I think, in a traditional, and I think the limit is like $7,000. And there is a back door where you can convert it to a Roth. So some people do that. Um, and then so that's how you kind of get into a Roth. I had mine left over from earlier in my career that was really just sitting there not doing anything for me. Um,
Yeah.
but you can put, and it's not a lot, $7,000 a year, but it does add up over time. Um, so people do that, but I think most people just invest out of their personal funds.
Okay. Well, let's say there's a doctor watching this and they're like, I want to do self-storage with Rachel. And let's say they do have an IRA,
Mhm.
maybe for a handful of years, maybe there's 50 grand in it, something. What is could we talk through the steps? Like, how do they go from just a very regular basic IRA with their employer or however to they've sent it to title. They've sent money to title to do a deal with you. Could we kind of, at least the major components of what that looks like?
Yeah. So my regular IRA, I think, was in JP Morgan or something like that. And then so I had to convert it to another company that has self-directed. So the usual banks that you think of, JP Morgan Chase, Fidelity, those regular ones, they don't have self-directed IRAs. So you have to convert it and just, transfer your funds to another business or another custodian that has a self-directed IRA product. So I'm invested with PGI. There's also Self-Directed, which I think is Matt Sorensen's, and there's a handful of other ones. You can, Google it and find a list. But once you convert it, which really it takes a couple weeks, not a long time, and you really want one that has checkbook control. So that doesn't take, a lot of oversight from the custodian on their side to actually use your funds. So that's one thing that you want to look out for. But once you have it set up, I mean, you literally just do a wire transfer directly to title, and it's really easy.
So when it's like the checkbook, what limitations, if any, are there can you invest in? Is it like real estate, of course?
Hmm.
It can be sports cars. I mean, you mentioned art. Like, I guess,
Hmm.
what have you
Yeah.
noticed? Where do they draw the line?
There is a list of what you cannot invest in, and it's very small. The biggest caveat is that you cannot invest in your own stuff. So I cannot use my self-directed IRA to invest in my own self-storage properties or anyone in my immediate family. That's the biggest thing. There's also a rule about investing in properties that have a lot of rental income. If you get a lot of rental income, there is a taxable event on that. I don't totally know the rules because I'm not doing that. I just do the fix and flips to get away from that. But that is one thing that people should look into if you're investing in, like an STR would probably hit the limit.
Mm, okay. And then is there a timeline? Like, does it have to cycle back to the account every 12 months, 5 years, anything like that?
Not that I'm aware of, no.
Okay. All right. So here's a question. I know some more aggressive personality types do lend to themselves in some way, shape, or form. What is the consequence of that?
That is a good question. I'm not sure. I'm such a stickler for the rules. That stuff
Yeah,
would make me nervous. It would just not even cross my mind. Um, in my imagination, I think it would become taxable. I mean, like
taxable.
no one's going
Okay.
to throw you in jail, right? So what can the
Yeah,
IRS
yeah.
do to you? And basically, they're just going to charge you taxes.
Yeah,
But
that's a good
I
point.
would have to look that up. I don't actually know the answer.
I'm curious because I know I have a friend. He's double my age, and he's a type A aggressive type investor, and I know for sure he's using he's investing his own deals like that. I don't know what the corporate structure is, but you just provoked
Yeah.
my curiosity mostly.
So I have a friend who's a tax attorney. I'm actually going to be interviewing him for my Facebook group in the next week or two. So I'll ask him that.
Yeah,
Let you
are
know.
you doing that live or is it going to be recorded and posted?
It's going to be recorded and posted.
Okay.
I'm not
Yeah,
brave enough to do
now I'm
live things
curious.
just yet.
Yeah. Okay. So you primarily use yours for PML. What are some examples of returns that you're doing on those, I guess, the gap lending on fix and flip?
So the first one was 9% over 3 months, 9% flat. And there was a $75 a day late fee, and they were late 1 month. So I got a nice
Mm.
chunk from the late fees, which was nice. And then the second one I'm in is a 6 month. It was 20% flat, and then they prepaid that. And so I actually just used that 20% in another deal. So I'm making interest on my interest.
Yeah, compounding. Okay, so I'm in Gator as well. I've mostly leaned into sub two, but I've seen, the deal flow and stuff. How would you what benchmark would you say is the appropriate like risk correlation to returns? So I know a lot of deals you'll see like they that are posting like, hey, 50% returns. Like in your mind, at least annualized on
Mhm.
fix and flip, when it crosses above maybe 30 or 40% annualized, what number would you say does it start becoming a red flag? You're like, all right, these returns are a little too high. Why are they offering so much? Just from
Exactly.
like a 12-month lens.
Yeah, 30 to 50% is way too high. That's a red flag for me. Even the 20% I thought was really high. So, everyone has a different risk tolerance, right? Like your friend that you were saying is really aggressive. I'm not as
Right.
aggressive. So I just have a different risk tolerance. But when I see something that has a really high interest rate, it does raise some red flags. And so I look into it. I do the underwriting myself, and I want to see where that percentage is coming from. So really, you got to just ask them how are you explaining that? How are you getting to that number? And just walk me through the calculations. I want to see it.
And then how do you protect yourself on paper? Are you doing second position? Are you starting a whole new LLC together and you're like, I want to be a silent partner with a trigger? Or like what is your go-to?
Yeah, the first one I did was first position. They were buying these teeny little houses, rundown houses in, Detroit. So the house itself was $60,000. And so I basically bought the house and lent the construction money. So the protection on that one was I could foreclose and get the house if I wanted to. Not that I want a house in Detroit, but I could have done that. The one that I'm in right now, which is the 6 month deal, we created an LLC altogether. So all the investors and the operator. So we're in the LLC. So we all own the property. And so then at the end of the 6 months, when it's done and they pay off the investors, then they redo the operating agreement and they write us out.
Did you use your self-directed on that?
Yes.
Right, so that is my question. If you're in the entity, isn't that technically lending to yourself? How does that how do you do that?
Um,
Or is it because you have
Maybe
partners that
it
it's
it
okay?
it might be, but I'm not operating it, so I'm still basically a limited partner. It's passive for me because I'm not managing the property.
Okay.
But you're
That's the
right.
example I was
Someone could make that argument.
so my
Yeah.
friend that I was referring to, he did the same structure. Um, we bought a property together 3 years ago. LD's in it too, our project manager. And I've always been curious, like, all right, this third partner's in the project with us, but he used his self-directed to fund it. So like how does so I think you nailed it on the head though. It's you're not in the day to day. You're not operating it.
Yeah.
Okay. That adds some clarity. Um, let's see. Any other tips, like in terms of like do's and don'ts on the self-directed? Is it, I know it can be slow, or do you have any pro tips of maybe someone's looking at a deal, they want to use their self-directed, uh, anything that like curveballs that people may not realize until like they encounter it?
I think you really need to be familiar with the rules of what you can and can't do with a self-directed IRA. And if you don't know, you should ask either, your CPA or your tax person. Um, but it's pretty easy. And, investing in real estate is really a long game. So yeah, it can be slow. But if you don't do it, where are you going to be? You know, the reason why I don't like to invest in the stock market is, I think the gains are historically 8, 9%, but you pay tax on that. You pay tax on all of that. Whereas if I can get even a slightly higher, let's say I have the same gains, let's say I just make 8 to 9% in real estate, but if I can get the depreciation on it and basically make it at least tax free as much as possible, I get to keep all of that. And so that's why I like, investing in real estate and other alternative asset classes. And that's where you can really grow your self-directed over time because you get to keep all of the gains. So a Roth, is after taxes. So when it comes out back to you when you're 65, um, it's all yours.
Yeah, before I dove headfirst into real estate 3 years ago, I was heavy in as an analyst. I was very heavy in the stock market, bonds, all
Hmm.
of it. And once my eyes opened to real estate, I was like, this isn't even comparable. It's like it's
Yeah,
why would anyone be in the stock market other
exactly.
than propaganda?
It's propaganda, and also, there's so many institutions and hedge funds, and they can control the market. They have so much money. They can actually move the
Hmm.
market by themselves. And
Oh
so,
yeah.
as like a little old me and single investor, how can I possibly win in that game? Because it is a game,
Oh
right?
yeah.
And we're just a small
And
piece of the puzzle. So I would rather have more control over my money. And so that's why I like investing it in something that I can control.
and the leverage too on real estate. Like you talked about the stock market, let's refer to the S&P for simplicity. The S&P 500 historically it's like 8, 9% maybe. But
Hmm.
it's like if you can just get that on cash flow from a real
Yeah.
estate investment and you're getting the appreciation of it and like you mentioned the depreciation and the debt pay down, it's like it's not
It's
even a
it's
question.
not even close. Yeah. Yeah,
It
I think it is a lot of
I
propaganda of, invest in the stock market, invest in the stock market.
mhm.
And I think people also forget this is the longest bull run we've ever had. So people forget that the stock market can go down. It's been going up and up
Yep.
and up for what, 10, 15 years now. It's going to crash at some point. I don't know when, but it's going to. It has to, because that's the way it works. It does go up and down, and real estate can go down too. We had the crash back in what, 2008, but that was a very short period of time. And so when you're invested over like 5 years, you're easily going to ride that out.
It's funny. I think you were in the hot seat circle, but LD came up during that first day of the mastermind, and he said that his first property he ever bought was literally the day of 2008, like when they first started announcing all the banks. But he held it, he wrote it out, and now today it's over $1 million. Like it's quadrupled.
Yeah, didn't he say
And
it's like his best producing asset?
it's actually a co-living. Yeah.
Yeah.
So yeah, it's I before real estate, I was on the fence of becoming a financial advisor, like Wells Fargo, Edward Jones, like those type.
Hmm.
But once I saw, like, I got my real estate license, and I realized it's like, why are they telling people to buy just very basic rentals with that same amount of money, and their outcome is it's like if they because a lot of the advisors they get paid on assets under management that they're very biased. They're not a true
Yeah.
fiduciary.
Right.
And I was like, if they had their client move that 100 grand over into a very basic rental, hired a property manager, like their outcome in 10 or 15 years is significantly different than just keeping it parked in the S&P 500. It blew my mind.
Yeah, I gotta say, a lot of financial planners annoy me because, again, they just point people towards stocks and they get a cut of that, right?
Mhm.
So, like you said, they're not a true fiduciary because they're not really doing the best for you. They're, and maybe, that's just what they know. And, I won't say they're all horrible people, but that's what they know and that's what they do. And they're just very,
Mostly.
siloed. Um, but even if you do have a financial planner who says, okay, you should go buy some real estate and that would be good for you. Like, how do you go do that?
Mm,
Right? I mean, they just, and, so it's like, if I'm a doctor and I say, hey, you need to go lose weight. Well, how do you do that?
yeah.
Right? You need the actual steps to teach people how to go about buying real estate, what they should buy, how do they buy it in the right way, and how do they do it safely where they're not going to lose all their money.
Yeah, absolutely. They need the recipe. Well, before we jump off, two questions. What are you looking for in your business, your real estate business?
Mhm.
Is it like certain deal flow, capital? And then part two, question two, is how do people reach out to you?
So right now we have a lot of deal flow for our self-storage. We do need some investors. We're looking for long-term partners. So if anyone wants to get into a self-storage, it's a great business. It's a very lazy business. There's not a lot of management, but we're just wanting silent partners because we'll do all the management. We already have that in-house. So if anyone wants to get into self-storage, hit me up. Facebook is probably the easiest way to get a hold of me. Rachel Johns. It's John with an S. It's not Jones. And I do have the Facebook group. It's Pulse, like taking your pulse, investors. So you can search that up and ask to join, and I'll be happy to have you.
Awesome. Well, thank you so much. I'll have all the links in the description for anyone watching.